Hi, this is Zach Meir with the Bulletin Board Heroes here at Vox Markets for Wednesday, the 23rd of February. And quite a selection today, a quite exciting bunch. Starting with Beowulf Mining, which looks as though it's completed its retracement back from the 18 pence peak that we saw last month, finding support roughly in the middle of old resistance in December, January, around the 11 pence level. And while we're above that, looking for a push to the top of the December rising trend channel at 20 pence. Perhaps as soon as the end of next month. If you're cautious, maybe wait for an end-of-day close through 13.8, which is the current position of the 50-day moving average. On to Audio Boom, which seems to have potential suitors all over the place on every street corner. Here you can see that we're fast approaching the previously rather ambitious sounding £24 target. So that was a line of resistance there from the beginning of last year. We're, I suppose, a couple of pounds away from that at the moment. The excitement, though, I suppose, is also from the way that we've had this unfilled gap to the upside that we had a couple of weeks back. The top of that gap, 19 pence and 19 pounds rather, and above that, looking for 24 initially. And then, if you're a fan of the shares and expecting M&A fireworks, there is a technical target there with that May resistance line projection from last year, currently heading as high as £34. So maybe that is something that some people could be looking for over the next 1 to 2 months, something like that. But £19 at the top of that gap, the stop loss on a technical basis at the moment. One of the market's favourites of the year to date has been Canadian Overseas, and here it looks as though the shares are just about to complete the consolidation they've had since the beginning of the year, so 30 to 40 pence. We've broken that line, or we're breaking that line of resistance there from January around 35.5. So we want to see maybe 36 pence plus on an end of day close basis just to be safe. And that could then trigger a move up to the top of the broadening triangle from August as high as 55 pence. And looking for that over the next couple of months, so sometime in early April or so. Stop loss at the moment, obviously an end of day or a weekly close back below 30. So I think risking 5p or so, or 6p in order to get 20p seemed to be a reasonable risk reward there. Another oiler, which is going rather well at the moment, is Europa. Here we've actually, it's always nice when you hit a rather high angled trend line target. Here we hit that at 3 pence today. That's a resistance line there from June. And the view now is that if we can get a decent end-of-day close through 3 pence, maybe a weekly close, then we could head on to a further upside as high as 4.5 pence, which is the top of that March 2021 price channel, the sort of rather wide one that we got in place there. But it looks as though plenty of legs here on the Europa chart with the gap higher that we had at the end of December, and new support coming consistently above old resistance. So, new support coming in above old resistance, and looking pretty strong there as well in terms of the candles that we've had over the last week or two. So a lot of momentum intraday there as well. On to another stock which is flying high at the moment, Egdon Resources, another stock that's hit the target, which is very satisfying indeed. We had the Golden Cross unfilled gap to the upside earlier this month as well, so everything going on there. The view at the moment is that we can get an end-of-day close above 3 pence. We could hit that August resistance line projection at 4 pence, maybe as soon as the end of next month. Stop loss around, I suppose, recent support around 2.3 pence, and ideally the shares don't even go back below 2.5, but 2.3 looks to be the better stop loss level at the moment. A company which has embraced DFS furniture today is Eve Sleep. And what's interesting here is that we had a bullish divergence line. The third hit was basically today, or actually yesterday, in fact. So that was a pretty good thing to happen. And buying on the open obviously would have delivered the upside that we've seen today. In terms of what might happen next, looks as though we could get up to 4 or 4.25 pence at the top of that broadening September triangle. But the main message here is that we've had a double bear trap gap reversal, the bear trap below the old January low around the 2 pence level, and that double bear trap explains on a technical basis why we've flown so high today. Moving along to stock which has been on the back foot for quite a long time, Genedrive The good news here is that we've got this bullish divergence line, and we've just broken that line of resistance from back in December, so that's versus around 15 pence. So around, well, while we're above 15 pence, the bulls have got a chance of at least temporary salvation. Best case scenario target at the moment up to 27 at the 50-day line, otherwise obviously just a retest of the early February resistance around 22.5, but 15 pence key in terms of being held there at Gene Drive. On to Kibo, which I covered quite recently on that trendline break around the 0.15 levels. Done well since then. Got a V-shaped bull flag. End of day close above the initial February peak at 0.22 could take the shares up to 0.32, which is the top of that broadening triangle on the daily chart from back in June. So ideally now the shares don't actually even go below the 50-day line at 0.17 and head to 0.32 by the end of next month. Moving on to stock, which has also revived itself. I think I covered this a couple of days ago. Was looking for the shares to break above that line of resistance there from November. And that was around 6.1 pence. We've done it today with quite an emphatic move. Top of that broadening triangle there, as high as 14 pence. And we could see that by the end of the next month at the current rate of progression. In fact, by the end of this month, the way things are going. But end of next month seems a bit like a conservative time frame. It'd be nice to see an end of day close today or at least this week above 9 pence, which is post-December resistance. That would be a decent signal. Quite outstanding here, the way that we had a very oversold RSI for such a long period of time down towards, what's that? Well, basically on zero, actually. So it can't get more oversold than that. So hopefully there will be quite a decent snap back, even more than we've seen already on MAST over the near term. Bear traps are always useful on charting situations, and we seem to have one here on Powerhouse Energy. The low there back in August was 3.25. We had that again for January, and with the low, I think yesterday around 2.95, little bear trap there, and an end of day close above 3.2 pence would seal the deal as far as this being a bear trap. Initial target there over the next week or so up to 3.9 at the 50-day line. Best case scenario at the moment over the near term up to 4.5 pence, which is post-December resistance. One of the horrors of this year to date, and there's been a few already, I suppose, with Advanced Energy, but one of the horrors to date has been Synergen. I still can't believe my eyes looking at this particular chart, but we've had an inside day breakout for the shares and above 28 pence. For those who feel like getting involved in this horror story, we could at least test the top of, well, rather the bottom of the gap from last week at 39 pence over the near term, if that acts as some consolation for traders who have suffered in that particular situation. Big news for Valerium blockchain, or Valerium, today with the Gibraltar Stock Exchange moves. Here you can see that the shares finally broke that line of resistance there from June at 41 pence last week, and we were in a little sort of bull flag there above that broken resistance line. That's a sort of classic pattern there and should power the shares to further gains, especially while we're above that late January peak there at 42 pence. The other point to note is that both the 50 and 200-day moving averages are now rising. That means we're in the run-up to a golden cross buy signal for Valerium. Traditionally, the run-up to a golden cross is the strongest part in the cycle, so we'll hope that this particular point here is equivalent maybe to the what we saw back in April last year. If that is the case, we'll not only hold above 50 pence, which has been a bit of a sticky area in the recent past, but we will finally head towards the top of the rising trend channel from March last year, as high as 90 pence plus over the next 1 to 2 months, or perhaps even sooner. But at least while above the low 40s, looking very well set for Valerium at the moment. That's it from me today. More updates tomorrow.